Hey guys, in this video I'm going to have a quick chat with you about how to run a business from a self-employed point of view when it comes to your business and personal accounts. A lot of people, when it comes to being self-employed, don't actually require to be set up a separate business account. When you're a limited company, you're going to have a separate entity, and that separate limited company is going to have its business account. But a lot of sole traders and self-employed people just use their main working personal account. So let's say you have a normal bank account with AIB or Bank of Ireland, you might just be using that to run your business. And this is a disaster because it's very hard for you from a cash flow point of view to do it. But also, if you're going for a mortgage in the future, it makes it very difficult for the mortgage underwriter to have a look and see what was business expense, what was personal expenses, and it's a little bit all over the shop. So generally speaking, when it comes to self-employed people, I recommend that you operate 3 bank accounts. So don't have heart failure when you hear 3 bank accounts. First tip is going to be use the same bank. So let's say again you bank with Bank of Ireland, you're going to have your 3 accounts with Bank of Ireland. But I would also recommend maybe using something like a Revolut business account, which isn't the worst thing in the world to do. But let's look at the 3 type of accounts you need to have. So the first one you're going to do is your main personal account. Now, I don't know, let's say you're a sole trader and you're paying yourself €500 per week. Every single week, from the third account down here I'll get in a second, or your business account, you're going to transfer your wages into your personal account. And that has to look after your mortgage or your rent, your bills, your food, your shopping, etc, etc. So don't mix the two of them. Make sure every single week you pay yourself in your wage from your business account into your personal current account, and don't mix the 2 accounts up. So never put a business expense through your personal account. Make sure you keep it for stuff that's personal to you and or your family. Next we're going to do is a tax account. Now this, guys, I can't emphasize how much this advice has to stick with you if you're self-employed. If you're self-employed, you pay your tax the year after earning your income. So let's say we're in 2021 now, so you earn income between January and December 2021, you're going to have to pay your tax in 31st of October in 2022, or the 15th of November it's going to be online. Now this is where most people don't succeed when they become self-employed, especially for the first time. They forget about the tax piece or think they're going to earn more money the next year to pay the tax piece. And when they get to the 31st of October, they need to go for a loan from the bank to pay their tax bill. And now the following year, they're trying to save for their prelim, pay their prelim, save for the following year tax bill, and pay the bank back. And that just puts you under too much cash flow pressure and you're gone. So what you usually do is you're looking to put about 30 to maybe 35% of all sales into your tax account. So as soon as you send an invoice to a customer, let's say the invoice is for €1,000, the €1,000 is going to hit your third account here, your business expense account, which I'll get to in a second. The €1,000 are going to hit that account, and you're going to pay €350 into your tax account. And that means by the time it comes to paying your tax, you have your tax sorted. Now obviously the 35% is a rough figure. You're going to find a lot of people out there that are going to have an accountant that are going to reduce your tax liability by obviously offering some legitimate business expenses through the account. Account 3 coming up is where your business expenses, your running costs, or where your invoices come through. Okay, this is very important to keep this separate, and maybe have a separate debit card for this account, or if you do require a credit card for running your business for whatever reason, you'd have it going to this account. So that should be all cost of sales. So if you're buying in goods or services or whatever you're doing, if you're buying anything in, you're going to take that money in and you're going to put it into your business account. So very roughly, guys, you're going to do here is look at an example. Let's say you have a business and the business is bringing in €5,000 per month. Okay, so first of all, let's just take a rough 30% and say we're going to put in €1,500 up to here. Okay, and let's say for argument's sake, I'm paying myself, and I'm going to be paying myself £500 per week or £2,000 per month. I'm going to put in £2,000 up in the personal account. Okay, and this leaves me with €1,500 in my business account, and that's there, the cost, service, any costs, direct debits, right, and that may be there, like, I don't know whether it's rent or insurance costs or cars or vans or whatever you have in your sole trader business account. But please, I don't care how small you are or at what stage you are setting up your business. As soon as you decide to set up your business, do this. Because I've seen way too many people fail miserably with their cash flow management of their business. And I can honestly say to you, the number one thing that kills businesses, not the lack of customers, it's usually poor cash flow management. You get into loans and you go bust, and it's generally around that kind of tax liability that you have from the following October. Hope this has added value, and if you do know anybody that's self-employed or thinking about going out on their own, please tag them in this video and like it and share it. Cheers and have a good day.